Hi everyone, my friends across the pond. This is November 30th, 2023. Michelle Schneider, Mish, Chief Strategist of MarketGauge.com. And we just did a video for you yesterday, so I'm just going to follow up a little bit. Basically, there was a tremendous amount of buying at the end of the day that came in. Of course, end of month, sometimes what they call window dressing, and as we're getting into December, there will be a lot of just evening up of different portfolios in the month. We know that December typically turns out to be a good month, so we'll see if that happens. But right now, yesterday, we talked about SPX, and I gave you some levels with the possibility of seeing this as a reversal top. But that did not turn out to be the case because it did not close under 4,547. It tested it there during the day and it looked very vulnerable at one point, but ultimately this came back and wound up closing at 4,567. So we're still kind of right there at this level of the low of the gap, which was a 4,567. There you go. We're kind of like right there. But we already filled the gap actually yesterday. So now we have to say what happens from here. So let's talk about the fact that even though we didn't get a reversal pattern, we still have to get through that level, and that level being where this market opened today at 4,571. So let's say anything over 45.71, we're going to say more to the bullish side as we start December. Under 45.71, I wouldn't necessarily say negative, but I would certainly be looking at underneath the close 45.67 as somewhat negative. So under 45.67, slightly negative, above 45.71, positive. And of course, where do we go from there? You know, we're still looking to see what happens if we can get anywhere near this 45.90 level, 45.95. And of course, on the downside, it would be if we broke that, then I think we would probably see a lot of frustrated longs and we might get a much bigger move down to around 45.25. So today was also a pretty big decision by OPEC Plus. You could see that 80 continues to be great resistance. Now, by the way, what you're seeing now, which I haven't shown you before on this particular chart, is that I turned everything to candles and I color coded the 50 and the 200-day moving average just to kind of make it easier to see. So I'm still going with the same thing. I want to see 75. Look at that. I mean, that was the low. That's going to be my area. Break 75, we'll get more negative. And at the same time, even though it's not the most immediate area to clear, the major area to clear, of course, is 79 to 80. So let's take a look. Considering now we closed right under 75 at 75, excuse me, right under 76 at 75.78, your 200-day moving average is at 76.23. So here's what we're going to say. Over 76.23, bias is more positive. Where can it go? Well, obviously 77 could be some resistance. It has been 78, merely basically 77 to 80 to 78. More resistance, and then we start to get back up there and buyers might come back in thinking, okay, here we go. Obviously we'll still look at that 80. Underneath that 76.20, we're going to say that 75, of course, is going to be the big area of support, and then if that breaks down, I would be looking back down at around $73. Overall, if we look at the whole formation of this, yes, this may look somewhat toppy, but I believe that the support that we're seeing here at one low, a little bit of a higher low, and then a higher low still, means that overall we're range bound, but at some point we could still see higher oil prices. Looking at gold, I mean, obviously you can see how beautiful this is. This is the December contract. We're really holding above that 2,000 level. It wasn't exactly the highest close that we've seen in 2023, as a lot of people were looking for. But nonetheless, it was a pretty darn good close, even though we did wind up selling off a little bit at the end of the day. even though thank goodness we didn't close underneath here. Underneath here being 2036, today's close was actually right there at 2036.90. If we had closed under 2036 on a new 60 plus day high, I would have said, hey, maybe all these bulls coming in are getting a little bit ahead of themselves, and it's the typical when it looks good, time to sell. But we kind of saved by the bell, so to speak. So now we'll see what happens here tomorrow. If we're looking ahead, clearly you can see that this low, that what we just mentioned to you right here at the 2036 and the close of today as 2036, guess what? Makes that a pretty good pivotal point to trade from. Above 2036, we're going to have to say more bias to the upside. Below, perhaps we'll get a little bit more of a correction. Where could that correction go? I still think 2020, maybe even down to 2010. But I definitely believe that even with a little bit of correction, the long-term trend in gold remains higher. So haven't looked at the British pound versus the dollar in a while. So interesting that since the last time we did look at it, obviously the pound has been doing better against the dollar. The dollar did rally a little bit. Remember though, we talked about it yesterday, at what point would it look oversold? And so I guess we can kind of say today was the day. But now going into tomorrow, what's interesting is we had the low from this day and the low from today. So basically we're saying around 126.26. If it's under that, then we could possibly see more continued strength in the dollar against the pound. And on the flip side, I would say that if we get past the low from yesterday, which was 126.945, so let's call it 127, then I would say that maybe this was just sort of a one-day pop. Now, is this a new 60 plus day high? The date on this, of course, was 11/29. 60 days before that would be September 29. And in September 29th, we were lower. So this was not a new 60 plus day high, just a peak with a little bit of a sell-off. So remember that above 126, really basically 126.94.95. We're above that bullish, and below it maybe we're going to be looking to see what happens here at these lows at 126.26 and see if we can get a little bit lower here or a little bit more strength in the dollar. And I would say from there, our next really good point of support would be somewhere around 125.40. Now the euro's a little bit dicier because this is a new 60 plus day high that was made yesterday on November 29th. And if you go back to 60 days before that, which remember we said was September, this actually hadn't been trading up there since back in August. So that means, again, we want to look to see if we get about a 5 or 10% move lower after making this high here at 101, well, actually 110. Let's just call it 110. So at this point right now, to me, it would seem like with this reversal pattern confirmed, we have to start looking at the support levels. This is the 200-day moving average, and that would be at 108. Before that, we'd have to be looking also just a little bit higher at 108.5. So let's say this. Coming into tomorrow, we're going to call this area right here the pivotal area. This is at 109.25. We take back 109.25. We still, once you have a reversal pattern, you have to clear the highs that was made of the day of the reversal pattern, which means it would have to clear 110.173. So we'd be looking for that. If it cannot get back over, say, this 109 level that we were just looking at, then right now any rallies up to that could be sold. And if we continue to break down from here, like I said, look for some support here around these lows. Now let's call it a little lower, 108.44, and then we start looking at that 200-day moving average at 108.14. What is also interesting to me is the slope. So you've got a positive slope here on the 50-day moving average, a positive slope on the 200. And even though this is an accumulation and not a bullish phase, we have to say, unless this really gets destroyed, it does seem highly probable that the dollar will start its ascent again, its descent again. And that is also after I've looked at the dollar chart here. Right now, the dollar, of course, is in a range between, I'd say, really 108 and 102. And that's also something for you to keep in mind when you're trading currency pairs. And we're going to end with a look here now, the opposite. Before we looked at the pound versus the dollar, the euro versus the dollar, now we're going to look at the dollar versus the Japanese yen. And again, remember we talked about the fact that it might have been a little bit oversold. And so that's why we saw the pop in the dollar here, as you can see. But the dollar, just to kind of support that it still may be in a downtrend, has not yet cleared back above this 50-day moving average. That's at 149.65. So that's the number to keep in your mind. Once it clears that, then of course we've got a new rally in the dollar, and that will certainly affect what happens with the pound and the euro. But for now, just getting a little bit closer here, let's just say that we have pretty good pivotal point, right? Look at this doji day right here. It's the open on this day. It's the close on this day. So if we line that all up, it also happens to be close to the high of today. So let's say above 148.33, that's going to be bullish for the dollar, bearish for the yen. Below 148.33, the opposite, more bearish for the dollar and more bullish for the yen. And if we're going to see this pop back up in the dollar, then of course we're going to be looking at this area. And if we're going to see the yen pop up, then the next really area we have to look at is going to be where you start to see all this congestion here that's also seemingly lined up close to the lows of the other day. The low of this day being, which was yesterday, 146.67. I would probably say we could break that low pretty easily and see something closer to around 146.30, 146.40. So that was where I would be looking at for the yen to rally and the dollar to fail. And then, of course, if this is going to get even stronger and the dollar is going to get even weaker, we break that area. Then the next one we're looking at is the bottom of all this congestion, and that would be somewhere around 144.80. Okay, that's it. I won't be around for next week or so. So I'll see you guys when I get back in the middle of December. Have a great couple of weeks. Hope this was helpful to you. Have happy trading and bye for now.